And Jim, I'm interested to get your take as well about what you expect from the Fed tomorrow. And also, Jim, just listen how you're thinking about the market, where you're seeing investment opportunities.
Sure. For the most part, we agree with Vincent. The Fed does not like to disappoint when the market is kind of all lined up with an expectation like they are for this week, where there will be a pause. The Fed will deliver on that. So we do expect them to take this meeting off. However, we do think there is at the least one more hike baked in the cake. So that will probably come in November. Market projections are, not huge on that, a little bit better than 50-50. We expect them to deliver. And we're not necessarily in the camp that it'll be a one and done situation. We think that a lot of what's happening underneath is, from an economic perspective, is probably still a little bit hotter than what the chairman and the FOMC would like to see. We have a little bit of a turn in some of the inflation numbers, obviously, particularly from a headline perspective, given what's happening in the energy markets. So we do think that the chairman will leave the door open. So we are looking for a bit of a hawkish tone. Has the market exactly priced all that in? We don't think it has. I mean, this is a very interesting situation that we find ourselves in this year, where we have growth type stocks up almost 30%, and the broader market up over 15%. And remember, I mean, we have yields up 60 some odd basis points this year. It's fairly unusual to see all of this multiple expansion in the market when real rates are rising. We're a little bit skeptical of that, and therefore we are a bit negative on the market, and we are fading further appreciation from here.
Vincent, we're talking about the FOMC as a whole, but the reality is this is a divided committee. We've heard from the likes of Raphael Bostic as well as Austin Goolsbee, who talked about the lag factor and how the Fed needs to consider that more. Do you think the economy as it stands right now is strong enough to withstand the lag factors, even if the Fed does hike one more time this year?
Well, look, I think the economy is pretty robust. We're averaging 1/3 workers added to payrolls a month. I think that restrictive Fed policy puts the expansion at risk. We are more vulnerable to adverse shocks. Shocks being government shutdowns, snapback in student loan payments, prolonged strikes. So, yeah, we're at risk. I think they went to it with their eyes wide open. Because 5 out of 6 times the Fed firm policy on a consistent basis, there have been recessions over the last 40 years. Because they're doing it because they want to get inflation lower. They haven't accomplished the job yet. I think the big surprise for markets isn't a quarter point here or there. The big message the Fed's going to want to convey is they're going to keep policy restrictive for as long as it takes. The funds rate's going to rest at an elevated plateau, and it's going to stay there until they're convinced inflation's on its way down. I think Chair Powell would rather anchor the funds rate on that plateau than fight for another quarter point or so with markets. That's why we think there's, at best, another quarter point hike on the table.